US has been strangled. US is on the losing side. US losing money. The ongoing trade war between the two largest economies in the world is entering a new stage. China's recent decision to halt exports to the US has sent shockwaves through the global economy, sparking concerns and uncertainties on a worldwide scale. This move holds significant implications for both countries and the interconnected global market. As the two largest economies in the world, any disruptions in trade between China and the US have far-reaching consequences that extend beyond their borders. The potential fallout from this decision could lead to supply chain disruptions, increased prices for consumers, and heightened tensions between the two economic powerhouses. Beijing announced that it will implement export controls on aerospace equipment, engines, and key materials used in the production of bulletproof vests, effective July 1, 2024. According to customs data, these controls will impact approximately $8 billion worth of exports recorded in the first 4 months of the year. Oh my God. That is huge. The new export controls are part of a broader strategy by China to regulate the export of critical technologies and materials, particularly those with potential military applications. The controls will be enforced by the Ministry of Industry and Information Technology, in conjunction with other government departments, which will oversee the licensing and regulation process to ensure compliance with national security interests and international obligations. In order to fully grasp the complexities of the ongoing trade war between China and the US, it is crucial to delve into the historical context of their trade relations. The economic ties between these two global powerhouses have been a roller coaster ride, shaped by key events that have significantly impacted their trade dynamics. From the establishment of diplomatic relations in the 1970s to China's accession to the World Trade Organization in 2001. Rise of China as a global economic power. China's economic growth has been nothing short of remarkable, propelled by key factors such as its massive population, rapid industrialization, and strategic government policies. As a result, China has emerged as a major player in global trade, becoming the world's largest exporter and second largest importer. US-China trade imbalance. The trade imbalance between the US and China has been a contentious issue. Like with the US consistently running trade deficits with China, statistics reveal a significant trade deficit for the US, as it imports far more goods from China than it exports. Factors contributing to this trade imbalance include differences in labor costs, currency manipulation, and varying regulatory environments. The impact of the trade deficit on both economies is multifaceted, with critics arguing that it has led to job losses in the US and a hollowing out of certain industries. On the other hand, proponents suggest that the trade deficit has allowed consumers access to affordable goods and fueled economic growth. Escalation to trade war. The escalation of trade tensions between China and the US can be traced back to the imposition of tariffs and trade barriers by both countries. The US initiated the trade war by imposing tariffs on Chinese imports, citing concerns over intellectual property theft and unfair trade practices. In response, China retaliated with its own tariffs on US goods, leading to a tit-for-tat exchange of trade barriers. The consequences of this trade war have reverberated across global markets and industries, causing disruptions in supply chains, fluctuations in commodity prices, and uncertainty for businesses worldwide. The ongoing trade war continues to impact economic growth and geopolitical relations, underscoring the complexities of trade disputes between two economic giants. China decision. The ongoing US-China trade war has created a challenging environment for Chinese exports, leading to uncertainties and disruptions in the market. China's decision to halt exports to the US can be seen as a strategic response to navigate through these turbulent times. The trade tensions between the two economic giants have not only affected the volume of Chinese exports, but also introduced complexities in supply chain dynamics. Market demand fluctuations and supply chain disruptions further exacerbated the challenges faced by Chinese exporters, prompting them to reevaluate their strategies. Political response. In response to China's export halt, key political figures in the US have been vocal in expressing concerns and exploring potential strategies to address the situation. Statements from government officials highlight the urgency of finding solutions to mitigate the impact of disrupted supply chains on US businesses and consumers. Policy measures under consideration include incentivizing domestic production, diversifying supply chain sources, and strengthening trade relationships with other countries to reduce dependence on Chinese imports. The broader implications for U.S. foreign policy and trade relations are significant, as this development underscores the need for a more resilient and diversified approach to global trade. How the U.S. navigates these challenges will not only shape its economic future, but also influence its standing in the international arena. Supply chain disruption. The sudden halt in China's exports to the U.S. has triggered significant disruptions in supply chains, posing challenges for businesses and consumers alike. Thus, companies are swiftly adapting to the altered landscape by seeking alternative suppliers, renegotiating contracts, and exploring domestic production options to mitigate the impact of the export halt. However, consumers may face difficulties in accessing certain products as shortages and price increases become more prevalent in the market. Like this video. Don't forget to subscribe. Food price inflation. Chinese imports play a crucial role in the U.S. food supply chain, with a wide array of products making their way from Chinese farms and fisheries to American tables. As disruptions in exports unfold, consumers can anticipate price increases on these essential food items. Rising costs of home appliances. The decision by China to halt exports is expected to result in increased prices for home appliances in the U.S., impacting essential items like refrigerators, washing machines, and microwaves. China plays a crucial role in the production of home appliances, with many leading brands relying on Chinese manufacturing for their products. As a consequence of disrupted supply chains, consumers can anticipate higher price tags on these household essentials. Rising prices of electronics. The halt in exports from China is poised to have a significant impact on the prices of electronics in the U.S. market, affecting popular items such as smartphones, laptops, and TVs. China plays a pivotal role in the production and supply chain of electronics, serving as a major manufacturing hub for leading tech companies. With disruptions in the supply chain, U.S. consumers can expect to see price increases across a wide range of electronic devices due to scarcity and increased production costs. Impact on U.S. industries. The halt in Chinese exports is poised to have a significant impact on various sectors within the U.S. economy. The technology industry, heavily reliant on Chinese components, may face disruptions in the supply chain, leading to delays in product launches and potential job losses. Similarly, the manufacturing sector could experience a shortage of raw materials, hindering production and increasing costs. In the agriculture industry, farmers may struggle with reduced access to Chinese markets, affecting their bottom line and potentially leading to surplus produce. These disruptions could ultimately trickle down to consumers, resulting in higher prices and limited availability of goods. From electronics to clothing, home appliances, and food, the ripple effects of disrupted supply chains are expected to impact consumers' wallets. The challenges thus consumers may face in the near future include navigating higher prices, potential scarcity of goods, and the need to adapt to a shifting market landscape. Let us pray to God for the things to be better for our children. China is one of the predominant member in BRICS. BRICS is expected to destroy this economy in the future. Currently, many countries are lining up to join this association. Check out this video and I'll see you there.